So good morning, everyone. My name is Edalis.
My name is Luis.
My husband Luis. You have not seen our faces before because, like Dr. Cora mentioned, we are part of Narcusi. But we always try to make it here every semester. We love being here, serving here as well.
We've been teaching almost 3 years now.
Yep. We've been teaching for 3 years, so happy to be here. And today we're going to be talking about credit.
But before we go to credit, what was the first assignment that you have to do? You guys remember? The balance sheet. How do you calculate? You remember how you calculate your balance sheet? And that one will be your net will be what? It's going to be your starting point for this class. Like that. It can be a positive number, negative number. It doesn't matter really. It's just to see where is your start point. But then this class is focused in this side. What is this? Your income statement, your profit and loss. Your income minus expense equals your net income. If you lower your expense, or you increase your income, you increase your net income. Sorry. If you use whatever money you have left over here, you're going to use it to reduce your liability. And if you reduce liability, you're going to increase your net worth. That's how this class is connected. That's how you need to know what is your starting point. Then you work over here, and this one is going to help you increase your net worth. Why you have to do the first assignment to know where your starting point, working your expenses and your income, then to increase your asset or reduce your liability, to improve your net worth position. That's a quick summary how everything is connected, everything has been teaching during the class. Well, let's go now to...
Yep. So credit. Who read the credit chapter in the book? It may be a tricky question here, but anyone? Credit chapter? No? Not there yet? Missed it? Okay. So you will not find it in the book. If you've been following Dave Ramsey, he does not like credit, right? He doesn't like it. He doesn't believe in it. So it's not part of the book. However, nowadays, with how economy works, we have to leverage credit to be able to gain certain assets, right? So we need to buy a home, we need to get a mortgage, we need credit. So although he doesn't believe in it, we know it's a tool that we use and we leverage in today's economy. It's basically necessary, at least at the beginning. It's necessary. So we want to make sure that we kind of go over credit and how it works and how you can increase your credit scores. So, okay. We always like to mention a few scriptures. Credit itself is not a holy Bible, like a holy word at all. You're not going to find it in the Bible, right? So you're not going to find a Bible verses about credit or credit score. However, the principles are in there. Principles of credit, they're in there. And there's also a lot of verses that talk to us about how to manage it, right? So being faithful to God, and it warns us, for example, in Proverbs 22:7, it warns us about the dangers of debt and how it can lead to financial bondage, right? There's word in Romans encouraging to paying off debt. In some, it stresses the importance of integrity and repaying debt. So the word credit is not the Bible. However, there are so many Bible verses that does talks about credit principles, and it guides us on to tell us to stay out of it, right? Just stay out of it, be faithful.
I want to make a
polling question
for you guys before we what do you think in the end of Q2 this year, how much was the credit card debt in the US?
100 million, 1.5 billion, 1.2 trillion. They all sound way too high. Anyone says A? Show of hands. Anyone says B?
B.
Show of hands. B. B. We have B here. C. Anyone says C? We have C's here. D. C. C.
C.
It is C.
C.
It is C.
And let's go to the next question now. How much is the average balance at the end of each month of your credit card for the US? More than 5,000 or less than 5,000? More than 5,000?
Yeah.
That's the correct. Like the average US citizens have more than 5,000 at the end of each
Every
month.
month.
Why that's important? That's right now the interest rate is like 21%, between 21 to 20%. That means you're paying 20% of more than $5,000 every month.
Yep.
That's the reason when you do use credit card, you have to use it but pay it quickly because no, you don't want to be in that
Yep.
in that range.
So what is credit score? Anyone can say. What is a credit score?
You just give me the answer.
No?
It was like your ability to pay back.
Yep. Yep.
It's a
So-
measure of basically how risky of a credit you are to the bank.
Mm-hmm. Yep. So it is a numerical representation of creditworthiness, right? So if you come up to a stranger and you tell him, if I go up to you and be like, hey, can you give me $1,000? You're gonna be like, I don't know you, right? So, and that number is basically used to basically judge me, and based on that, I'll get certain rates, right? So it's a numerical representation of
What's
creditworthiness.
past behavior? And that's the reason Dave Ramsey does not like credit score.
Yep.
But to have a credit score, you have to have debt. That's the reason that Dave Ramsey does not like it, because to be able to have a credit score, you have to have debt, because that's because of your past behaviors.
Yes. So three-digit number, and like he mentioned, it's based on past behavior. So it takes basically like a snapshot of past behaviors to kind of determine what that number is. And the behavior that it looks that are used to determine is number of accounts, kinds of debt, recent inquiries, utilization percentage, and payment history.
There's three, and the main one that do the credit score is called a company FICO. People think that's a public company, that's a private company. They own the score and how it's calculated. And then they have this company over here that pay money to FICO to you be able to do the credit score. But those three also have a specific formula that are owned by them, that no one knows exact. We know like an average or a percentage more or less. That's when you use your Credit Karma or your bank, they give you like an approximation. But when you really buy something, you say, why my credit score is so different to my estimate? It's because the only way to know it is when you pay to them to give you the credit score. Yep. Because they're three private companies.
Yeah.
That's the most important thing. They're private, they're not public.
Yeah. Yeah. So like we just mentioned, it's based on past behavior. So we don't have the exact formula because it's privately owned, but we do know the factors that affect that formula. So that's what we want to focus on when we're looking at the credit. We want to focus on the behavior.
And yeah, so just to make a quick note, in future slide, we're going to see there's a new one score called Vantage score. And that's a creation of those three companies came together. They don't want to pay money to FICO anymore. And they came together and they create their own score. If you go to the bank right now, you can say Vantage score. Vantage. So you go to the app of your bank, you're going to see Vantage score, and they tell which one they are.
Yeah, most of the major banks
Most of the banks right now using Vantage score. And that's the creation between those three. They came together.
Yep. So like he was mentioning, so they all the bureaus, they collect and report a little bit different. So for example, if you are trying to get, let's say, a car, do you think they will pull your report from all three of the bureaus? One, two? What
Or
do you
which
guys
one
think?
they're going
Or
to use?
which one? Any idea? No?
I think it would be experience.
Experience,
I think
okay.
it's the highest.
So it's going to depend on the lender and what you're trying to acquire. So let's say you're trying to get a car. A car, or like a car loan, is less risky than a mortgage. So because it's less risky, the lender, they're going to pick probably
The cheapest one.
the cheapest one for them. So it will probably only one. So if they have a good relationship, let's say with TransUnion, that's what they're going to go, and they're going to pull just one. However, when you're trying to acquire an asset that has a higher risk, then they're going to pull all three of them, and they're going to go with the middle one, not the average, the middle one. Generally speaking,
But they can do whatever they want.
they can decide, but they would generally go with the middle one.
But they can do, well, that's like a rule that can go with the middle, but if they decide to go with the lowest,
Yeah.
they can do it also.
Yeah.
There's not like a rule of thumb which one they're going to use.
Yeah, but the lender is the one that decides that. The lender that you're using will make that decision. Okay. So how is it calculated? Like we said, these are the past behaviors that they look into. Which one you think has more weight in the formula for your credit score? Payment history, total debt, length of credit history, new and recent credit, or types of credit?
Just in case all five have to be equal 100%.
So this is a weighted formula. Which one you think has the biggest weight?
Out of 100%, which one have the biggest?
Payment history.
How much percentage you think?
Okay. It is payment history. It is payment history. So payment history is actually 35%. It's 35%. Let's wanna start with that one, or okay. So payment history, timely making payments, right? That's what it is. So 35% of your credit score is paying on time. If you are behind in a payment, always make sure to do like the catch-up payment, right? So like if you're behind 1 month, you need to make sure that you pay the one that you're behind plus the current one. Otherwise, you're gonna be essentially carrying over that it's gonna be late every month, right? So you kind of have to like make a double payment when you're behind so that you can pay the previous month plus the current one. Does that make sense?
And also because payment history is 35%, I mean that your oldest account have more weight than your new one. That's the reason if you're playing the credit score game to increase your score, do not close your oldest account. Normally, that will be your oldest credit card because that one is the one that weighs the most for your payment history.
Yeah, question. So you don't close your account, but you don't use it. So they can take away that credit from you if you don't use it at all.
But use at least once and pay it quickly, only to have it active.
So
I learned.
yeah, so what we would recommend in that case. So if you do need your credit score to be high because you are planning to acquire an asset, we would say keep it open, and so that they don't close it, you have to kind of like use it at least once, like a year or every now and then, and pay it off quick so that it stays open.
Yeah, I didn't know that until when I was purchasing a home.
Yeah.
Yeah, that's what happened. I never,
Yep.
I never used credit cards. I just
Yes.
never.
However,
Yeah.
if you do not have any plans of acquiring any assets that you need your score, and let's say that your credit card has like an annual fee or things like that, then maybe it makes sense to close it, right? Because you're paying an annual fee for something that you're not using. You're not planning to acquire any assets because your credit score will go down a little bit when you close it. However, if you follow the principles that we're teaching here, it's going to go back up. Okay, so it's going to be temporarily down, but it's going to go back up. Does that make sense?
Yes.
Okay.
Now, for the next amount of, I'm going to go show it here. Going back to the when we started the class, we said that we have the average people have $5,000 in debt. Let's say that you only have 10,000 limit. How much is that 5,000 over 10,000? How much it is in percentage? 50%. That's true. How much percentage you think for the credit score you have to be to this number don't affect you in the negative? 30%. 30% is like nothing happened,
Yes.
good or bad. If you want to increase your score, you have to be below 10%.
10%.
That means that you have to be in this same scenario. At the end of each month, you have to be $1,000 or less. And that's the reason many people say why my credit score is not growing quickly, is because this part over here. You see, it's 30%. 30% of the credit score is this one, and this is this is a simple one. The way that they calculate it, this is how much liability you have available. This is how much you use, and they calculate the percentage. But if your credit score are really high, that's why that number is affected. You have to be in total. If you want you're playing the credit score game, you have to be below 10% of how much you have available.
Yes.
If not, that's the reason many people, when playing the game, have issues in this portion.
Yeah. Also, if you think about last week class, it was debt snowball, right? Last week? Yeah. Debt snowball. If you follow the debt snowball, you will be working towards this. Okay? That's why it's so important that you make a plan on paying off the debt. Because when you set that up, your debt snowball, you will automatically be improving this. Like, you don't have to think of, these are not two different silo things. They work together, right? You prepare your debt snowball plan, you make your debt snowball plan, this is gonna go up.
Like I showed
You're gonna decrease your debt and your score is gonna go up automatically.
like I show here, you increase your net income, you do the follow the net, you start paying your liability, your net worth goes up.
Makes sense.
Okay. Then next is length of credit history. So this is what we were talking about, any older accounts. That's why, again, if you need credit score to be high, we wouldn't recommend for you to close your older accounts, because those are the ones that are giving you the history, like the longer history of payment history, of paying off debt timely, and all that. So like it gives you that history. So if you do need your credit score to go up, we wouldn't recommend to close the older accounts, because those are the accounts that will help you boost your score.
But quick caveat, don't get discouraged. If you pay your house, you pay your mortgage, your score is going to go down. That's something always going to happen. Normally when you pay your mortgage, how long you've been having your mortgage in your credit score? 20 years, 25 years, 15 years? If you pay your mortgage, you lose your length of history. That's when people pay their mortgage, expect the number to go up. It's the inverse. It's going to go down. Or you don't have that anymore and you lose the history. It's going to fix in the next 6 months.
Eventually.
No, you don't have to purchase. It's going to pitch, because then the formula is going to balance again with what you have now. But in the first 6 months, you say, why I paid my house? Why is my score going down? It's supposed to be a good thing. It's because you are affecting the variable over here, and you need the formula to balance again with your new history.
Is that only if you have a home, or if you have a home and credit, whatever?
Whatever is that, if you have a long credit, let's say you have a big land, whatever is your oldest liability, let's say you pay it, it's going to make your credit score go down.
Yes.
Then you need to wait at least in the FICO one, like 6 months, between 6 and 5 months, to the formula to balance again with a new reality, and it's going to start going up again.
Yeah.
But that's when you pay like an old account that you have.
Yeah.
Don't wait. But then don't. That's a good sign. That's what I say to people.
They want you to be bonded.
But a lot of people tend to think, well, I don't want to pay it off because then my score is going to go down. It's like, you don't have a mortgage anymore, right? Like, like unless you're planning to acquire something else in like the near future, like right after it,
Yeah, and in between 3 to 6 months, your formula is going to go up
it's going to
again.
go back up. So
It's so
it
you
doesn't
need
matter.
a little bit thing to the variable to balance in their system.
I'm like, I'm okay having a lower credit score if I don't have to pay
You don't have
a mortgage, right? Like it,
And your net worth goes up.
your net
Yeah.
worth goes up.
That's just when if you pay a big liability you have, you see your credit score down. Don't be discouraged. That's normal.
Yeah, and going back to Dave Ramsey, that he doesn't believe in getting debt and credit. He sometimes jokes about that he can't go in and rent a place because he doesn't have a credit, but then he can purchase like the whole building because he has
Gosh.
the cash to pay to pay for it. So don't be discouraged, right? To pay off your debt. That should be priority.
And then the next one is the new credit. That's a big one if you're in the process of buying a house or a big purchase. That's when they say do not open any new account. It's because every time you open a new account, you affect that variable. Like Dan is over here that he works in mortgage. He can tell you that when you're in the process of doing a mortgage, you cannot touch any new credit card. You can touch anything on your credit. If you touch it, you affect that variable over there. If you touch that variable, then you affect your whole credit score, and then you have to start the process all over again. He can tell you his story about that kind of stuff.
Yep. And then the last one also, 10% is a type of credit. So it's the mix. So having, let's say, a mortgage or car loan, like different types, the different types
How risky?
of credit.
And how risky they are to the lenders. Any question about that one? I know it's a lot of information, but any question, you can send an email to us.
What is a good score? This is according to Experian, not us, but they think that a good score is somewhere in the 670 and 739, and then anything 670, anything higher than that, it's great, amazing.
But right now, a lot of people are asking like 700.
Yeah, the average, most of the people are here.
670 is like the lowest one, but if you go like for my utility, they ask me to have in the 700 to give me stuff for like the month to everything, just in case. And this is what we call Vantage score. That's what the other three will come together and say, we don't want to pay FICO anymore because they're privately owned companies. Say, why we don't make our own score and sell it to the banks? And then create Vantage score. And they're using AI, artificial intelligence, to determine your credit score. The advantage of this one over the FICO score, you need 6 months of history to make to your score to change to good or bad. Vantage score is immediately. Like anyone without any credit score, with only 1 month of history, they can calculate it because they use AI and they can forecast whatever the number they need with the AI. Mm-hmm. But the good and the bad, like, the good thing is going to reflect quickly. The bad thing are also going to report quickly. What goes both ways. You can increase or decrease your credit score in an instant. That's the reason you're now when you go to your bank app and you see your score going up almost daily, is because they use Vantage score.
Yeah.
Just in case.
So now that the holidays are around, we wouldn't encourage, right, using a lot of credit or using credit. Hopefully you're making a plan, or maybe for next year you're making the plan, right, to save for that. But Vantage, if you use a lot of your credit card around this time, you're going to see it's going to go down late. It's going to go down quickly. Because Vantage is it's almost daily, so it will track basically your daily behaviors. So you're going to see the impact of your daily behaviors quickly, month to month, in your Vantage score. The FICO, like he said, 6 months, that's an approximate because it could depend. it's not necessarily 6 months specifically, but you're going to see that it's going to take longer to either go up, to go up.
And you say, I don't have to worry about this score. I don't need it for mortgage because FICO is the king. VantageScore was approved with Fannie Mae. That's the biggest one of the mortgage this year. Now people can start use VantageScore to apply for Fannie Mae mortgage. They will pass through the regulation, just in case. Like you have to pay attention to that one now because little by little it's going to become the king of the score.
Yeah.
And the main difference,
Little by little.
Say very fast.
Taking over.
taking over.
Taking over.
But the main difference of this one is instead of having 5, they have 6. It's like the amount owed, they divide it over here.
Yeah. Credit utilization.
And then available
credit.
credit. Instead of having only one for both of them, they said this is how much you have available, is 2%, and the utilization is a separate account. Instead of having both in one variable,
Yeah.
they divide in 2 variables. That's it. And then the other difference, they use AI. That way they can calculate it almost daily how your score is for that day.
So, recap here. So, how to increase your credit score? We already learned. Your payment history is the category with the biggest weight in your formula. So make sure to pay your bills on time. Pay your bills on time. You're already in a good track. Pay it on time. Second,
But
lower.
just-
Oh,
And if you're late in one payment,
yep.
pay it twice or whatever you're late. Try to be not a revolving
Yeah.
liability. Because if you're not revolving, that's going to show in your report that you always late. It says, you always like a 2 month behind. Try to catch up because if not, in your report it's going to show.
Yeah, like mentioned earlier, you pay the one that you missed and the current one so that you can catch up to it.
If not, you're always going to be and going to show that you're revolving
Yeah, you're
in a revolving liability.
yeah,
Like you have a
late-
revolving
late
liability.
payment. Lower your utilization percentage. So if you need to increase anything under 10% utilization, is going to give you the most amount of points. So the most amount of points, 10%.
That's this example over here.
That's this example. Also, I don't think we mentioned earlier, when you're looking at utilization, if you have multiple, like let's say credit cards,
It's the addition of everything.
it adds it all together. Okay? It adds all your credit score together in the utilization. So if you're thinking about, again, your debt snowball, where you plan to make one payment and then once you're done with that, you go to the next one, that's good for utilization. Because
And
it takes the totals.
And when you do utilization, you have to remember the credit score, the credit card that you did it one time when you went to Macy's or whatever, have the percentage and you forget about it, it's going to affect this number.
So you
Uh,
pay, question, you pay the lowest, right? If you have a balance on credit cards, you pay the lowest.
Yeah, with the snowball method,
yeah,
yes.
yeah.
You start with your
But-
smallest one, and when you pay that off, then you go to your next one.
But I always say to remember your credit card when you go to the store because we have a student one time that she forgot that she have a JCPenney score Sky one time that she bought it for something quickly because of the discount, and she forget to pay the balance, and that for her credit score. Even the one that you forget about it when you take the promotion, it's going to affect because people forget credit card are a loan.
Yeah.
You don't think about you're asking a loan to the institution to be able to do the purchase.
Yeah. So, yep. So, moving on, 10% under most amount of points. 30% will give you some points. You're not going to get the most amount of points, but you're going to get some. Anything over 50% is going to start to hurting your score. Okay? So, if you keep it under, and it will help you increase your credit score. Third one, we also talk about this one. Don't close credit accounts. So, if you need to increase it, don't close it. However, if you're not planning to purchase any asset in the near future and you have a card that has an annual fee, you don't need it anymore, then it's okay to close it. It may go down your score for a little bit, but it's okay because it's going to go back up after. Okay.
Other slide.
Then
Oh,
oh,
and one a
Pata?
big one is to you have access by law to 3 free annual report. Because I forget though, you have the credit score. How the credit score is calculated? What they use? No. The three main one. The three main one. What they use to give you that score? What information? How they get that information? No, they use your credit report. The credit report is like I always said, the credit report is the exam. Your credit score is your grade. The credit report is all your history in a piece of paper. All the debt that you owe. And that one is the one that they use to give you the credit score. You need without a credit report, you don't have a credit score. You need both. You need one to have the other. That's why you have access to 3 free credit report over there. Annual credit report.
One each for each bureau.
One for each bureau. You have access to 3 free during the year. Why that's important? There you go. Someone can steal your identity. Someone can make a mistake. Let's say you have your social security number is really similar to your sister, and they mix one and then put something of your sister in your account or vice versa.
I had an issue where somebody had stolen my identity and they ran my credit report thing, and I called them and I said, well, this is not me and whatnot, but it's still, and I called the credit companies, the Experian and all that, but it's still showing in there, like they never.
Do you do the letter and do you have to create a letter?
I sent them a letter, I sent them my.
But let's go to the other one.
Yeah. So quickly here. So the other way to increase your score when in this topic is making sure that you correct those errors of the report.
Vale, para hacer.
Oh, sorry.
Give me the website.
Oh, here. Oh, here.
Here, you need to go to consumerfinance.gov because you have to create like a case. If someone stole your identity, you have to create like a case. And that case give you the number, and they're going to ask for that number.
Yeah.
But you need to do like a police. Because my dad have something similar. Have someone buy a house in Minnesota with her credit score. And the first thing that you need to create like a case like someone stole your identity.
Yeah.
And with the number, then they can start. But you need to go like make a police case that you reported with the police.
I think we should add it here, but there's identitytheft.gov, I think. It's the federal, like the government's website. You go in there and that's where you create the case, and it will guide you step by step what you need to do. It tells you, reach out to the Social Security, reach out to, go to the police, and it guides you step by step. I know this because it happened to me a few years ago as well. So you do that with the government, because remember that it affects, it could affect your taxes and all that, depending on what they use. In my case, they were using my social for an employment. So obviously I was showing I had income from a different state I've never been. So it affected my taxes because I was getting letter that I owe money. So, but by having this case created, it gives visibility to the government in general. And then it guides you step by step what you need to do.
But you need to create the case first with what that case number is. That they're going to ask for the case number that you reported with any agency.
Yes. And then once you do that, they are dispute letters. There's sample letters in this website that you can write and send them. We would recommend to mail them because they have certain amount of days that they have to respond back to you. If not, they need to essentially close the case. They just need to agree with you essentially. So they have certain amount of days. I think it's 30. Don't quote me on it. But
depends.
It depends, and with the government issues, it's probably more right now. I don't know if you heard anything.
I haven't heard anything about that as far as the shutdown.
Mm-hmm.
So if you send the letters to if you go to Consumer Counsel, the website, they have those template letters, right? It's what you send out. And what they're saying, you're gonna send it to the actual creditors.
Creditors.
You send it to the creditors first, say, hey, this is wrong, and you show them you give them like a little bit of information, right? Your ID and stuff like that to show who you are, so it's not just a frivolous thing. You send it to them, they have a reasonable amount of time, technically a reasonable amount of, I shouldn't say technically, what we consider a reasonable amount of time, she's like 30 days.
30
right?
days, yeah.
So they have that a reasonable amount of time to respond to you. If they don't respond to you at that time, then the next step will probably be is to you either send them a second letter saying, hey, I asked for this, or not, go ahead and take it off. But if you're doing that, simultaneously send a letter to the credit bureau saying that you had sent this letter to them, they didn't take it off, and then they will take it off when you document that you had sent it to them, give a reasonable amount of time to do so.
Yes. Yeah. No, that's a good point. And in the identity theft process, I know one of the steps is reaching out directly to, the creditor or whoever the issue is with. It's definitely one of those steps. Because if you're waiting for, like, let's say, federal government to resolve, like, the different agencies, it's just going to take way longer.
And the other thing you have to remember, the creator is the one that has the burden to prove that you own that liability. It's not you that you own it. They have to show to the bureau that you really own that liability. That's the reason.
It still affects your credit score, though.
Yeah, but that's why they have the 30 day that he was in the rezone, the 30-day business day, to prove that you own that liability to the government. Or if not, they have to take. If they don't find the support that
They have to take it off.
they have to take it out, because they have to have the support. Yes, we give this loan to XYZ. If they don't have the support, they have to take it out.
And you want to use those template letters because they have some important verbiage. that's
Wording,
there.
yeah.
That's important. That's going to wake them up and let them know that they have to do it. You quoting certain things, and that those verbs that you tell them is putting them at notice that they need to take care of it. If you just send a letter without the proper verbiage, they could ignore it. They can ignore it, and I've seen that happen. But I've seen when you use the proper verbiage and you send it to them, it's either removed or you send that. So you gotta go to the creditor, the creditor that's putting it, right? You go directly to them. After they don't respond, you can send them another letter, but simultaneously send a letter to the credit bureau, let them know that I already reported this, I already told them to do it. This is you give them a copy of the letter, explain what you told them, and this is when it was sent out. They still haven't replied, so please take it off, and they'll take it off. But at the same time, it's because they don't respond in 30 days. They still have time to, if they realize it's correct, they could put it back on later. So just because it went off, because they didn't respond, I don't think it's gone forever.
Yep. So other mistakes that you can see in the reports, it could be, duplicated accounts in your reports, typos. If you have my husband's name, Luis Rivera, there's thousands and thousands and thousands of Luis Rivera. Chances are he may have an account in his report that it doesn't belong to him. Or, a typo in your last digit of the Social Security, so you may have someone else's account. So that's why it's important every year, try to pull those reports one time every year. They're free. Go over it. Make sure there are no duplicates, that every single account that it's in there is actually yours. Okay, so check your mortgage, check your car loans, check your credit cards, check line by line everything, and just double check it. If you find an error, then you follow the steps, dispute letters. Okay.
And let's go to the next one.
Yep.
We'll go
This
back
is
to
the information of the credit bureaus if you have to reach out to them. And the slides are going to be uploaded if not there already, so you'll have access to it.
This is something really, really, but really, really important. To protect your identity, you need to freeze your credit score. Freezing your credit score doesn't mean that you can use your credit card right now. That means that no one can open new accounts under your name. If you leave it open, people can hack you like less than 3 seconds. Like if you see right now the last Verizon, they do the identity theft every year. last year, almost $20 billion were stolen in identity theft. That's how much money they stole only last year. And that number is going to grow every year. It's not going to go down. Then the last 10 years, I grew almost 1,000%, just in case, in the last 10 years.
Yep.
I have two of mine frozen, but I don't remember it right now off the top of my head if it's either TransUnion or one of them. Do you have to pay to have them freeze?
No, it's
No.
all three are free.
They're free.
One of them doesn't give me the option to freeze. I don't remember if it's TransUnion or Sprint, but I know that two of mine are frozen.
I have all my three.
Yeah, we have
all
them
three
all.
mine are frozen. It's
done
right.
it recently.
Yep.
Just,
Yep.
yes, all three mine are frozen, and you.
So you can
please,
go back to all like the three bureaus websites. You go in there.
And create a free
It
account.
takes less, like 5 minutes or less. You just put basic information, name, social,
Social Security.
birthday, and then you just click freeze. And then if you do need to do like a hard inquiry, you're trying to open a new account. All you have to do is go back in there, unfreeze it, and it's right away. So it doesn't take, and then you can also tell it, keep it open, let's say for 24 hours and automatically close it after.
But one of them did not allow you to do the timestamp. You have
Yeah.
to unfroze and unback. I did it the other day.
Yeah.
I was doing something and they called me. We're trying to get your credit score. At first, that's true. I have because everything is frozen. I had to go back, unfrozen, did it after. I said, I'm going to give you 24 hours. Enter, you're frozen again.
Yep.
But this is really, really important to do.
Excuse me, do you have to create an account?
Yes, each one you have to
Each
create an
one.
account for each one, and sometimes it's in the top of the page. Other time, one of them is in the bottom of the page.
Yeah.
It's going to be on the top of the bottom,
Yeah.
and it says freeze my account. I don't know, depending where you enter those three, each one have it in different section of the page.
They're the only one that will have access to your account.
Yeah, but that one when you put frozen, it's like no one can open a new account under your name. You need
Yeah.
to unfrozen.
Yeah.
When you
Unfreeze, yeah. You need to unfreeze your accounts if you're trying to get like a new one. You can still use your, if you have a credit card, you can still use your accounts. It's just you can't open a new one.
And no one can store your identity that
Yeah.
way.
great,
Yeah.
thank you.
Oh, did we go back?
And
And that's it.
any questions?
Well, we're going to ask Soraya to
Close.
close us in prayer. That way we can go to service.